All right, what's going on, everybody? How you doing? Now, if you can hear me right now, please just let me know so I know I'm not talking to myself right here, but I am going to go through some tickers. I'm doing my own prep as we speak, and I figured I'd pop on here and do it for the universe as well. So, all right, cool. You guys can hear me. What's up, Snaz? What's up there, Seeker? For anybody listening right now, Seeker, Mr. Jake Lake over here, he's sponsoring 15 free month memberships. If you are interested, feel free to go to my page and see the entry rules to get in on that contest. So we'll be picking winners a little later on today. So yeah, you're going to notice that by a lot of these setups that I go over today, there's a big discrepancy between a lot of them, and we're really at a confusing spot. So I'll give you that. Now let me just come on over and I'm going to share my screen here. Let's see. Okay, hold on here. Where are we going? Okay, cool. All right, let's pop in. Great. Shared. Now let me come back and remove this title screen and we'll be good to go. All right, cool. So now let me do this as well. Perfect. Okay, so from I'm going to be a little more brief on NASDAQ than I usually am, and S&P as well. We'll focus more on the individual ticker names. So if you guys have any, feel free to drop them. I can definitely look at that one, Seeker, for sure. So in short, if we were to take a look starting at our monthly, because our monthly candle is coming to a close in just a few short days here. And we have non-farm payroll coming up next Friday. So that's just all worth noting. Now, if we were to take a look here on the monthly time frame, we will notice that we got into this monthly bullish imbalance back to back, actually. Wicked in, ugly wick down below. Ultimately, bodies of the candle is telling you the story. Wicks are going to give you the heart attack, but we are still holding above our previous imbalance and actually bouncing from that imbalance. So that is all coming from the weekly time frame. Now, for anybody who's been watching for a while, you're going to notice that there's been one recurring theme throughout all of this, specifically really starting in January, right? That's when people started to get on edge. Oh, we've been running since October. We're going to have to we're going to have to retrace at some point, blah, 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 all of this, right? And with that, my take on the whole situation and how I was going to manage it myself was to wait for a weekly imbalance to form, right? And if we were to go over to the weekly time frame, you will notice that we most definitely did form a weekly bearish imbalance here on NASDAQ. Okay, you'll notice that on NASDAQ and on ES, we've formed that imbalance. Ironically, SPY, the ETF, did not form one, but QQQ did. So there's a lot of divergence right now, and that is not ideal. And that's why, going back to my initial point that I made to kick off this stream here, was it's very confusing right now, right? Obviously, we would value the higher time frame as our kind of guiding force, right? And our highest time frame that we really are typically looking at is that monthly time frame, and that so far would suggest for higher. Our weekly actually is where we get that crossover and the cross up, where that bearish imbalance on the weekly. Again, why is that an important thing? I want you to go back in time and check every time that we formed a weekly imbalance. You will notice that we began to retrace. The only difference here is that in these other instances where we did form that weekly bearish fair value gap, we did not have a monthly fair value gap right below it or right in it. So that is where we are thrown for a bit of a loop. And that's why, honestly, the way that I'm looking at this is it is not a clear-cut trade on the higher time frame with NASDAQ, ES, or S&P. And that is why I really, other than scalping it and trading futures on it, there's really no interest from me to trade this on a swing trade, if you will. There's still a lot of decent setups out there that we're going to get into, but a lot of the larger names are above their previous all-time highs, and then it comes to a point, are we going to see that imbalance up and through, or is it time for a retracement? So we'll get into those as well, but that's just my take on NASDAQ right now. Very conflicting. If we were to go over to SPY, or ES is its futures ticker, and for those of you who might not found me a while ago, I chart, even if I'm trading SPX, SPY, QQQ, IWM, I actually chart their futures tickers. And the reason why I chart their futures tickers is because for me, any additional information is a good thing, right? So that's why you'll notice I have my extended hours on always, right? Any bit of information that we're given through price, I'm taking. So again, for example, if we were to go back and look in that overnight session, right, you'll notice that there's a lot more gaps on SPY and SPX versus what you have on futures. And there are actually sub levels inside those gaps that we can use to be much more precise, right? Rather than having a massive gap, the real level that we're focused on and the real level that is actionable or tradable might be a little bit smaller inside that specific level that we're already talking about. So that's why I'm using any little bits and pieces of additional information that I can in order to make the most precise decisions, right? Especially if you're trading futures where it's a bit more leverage, or if you're trading SPX, you don't want to take a position in a large gap. Let's say you added up the high of the gap. Ultimately, we're retracing down to the low of it. You're well underwater. Odds are your contract, even just to get back to even, you're going to have to go much higher than just your entry at that point due to theta. So that's why the precision, especially when you're trading these leveraged instruments, or even if you're trading with size, right? You don't want to see too much drawdown. We can be much more precise by using these futures tickers and using those additional levels that we receive overnight as a way to be more pinpoint and not see as much drawdown in our entries. So that's why I use futures, but all the same. So if you see NASDAQ NQ, think of QQQ. If you see me pull up ES, that would be SPY, SPX. Only difference is the numbers. Price action is going to be the same. RTY would be the IWM. YM is our Dow Jones. CL being energy. But just wanted to preface with that. But very similarly, if you were to look at NQ, very similarly here, we got into the bullish monthly fair value gap here, holding above previous all-time highs, which is encouraging for bulls at this point. Now, if we were to go over to the weekly chart, very similarly to NASDAQ, we got into a weekly imbalance, but also created a weekly bearish imbalance. So now, one thing that I think is important just for us to note is that despite us forming this weekly imbalance, right, our expectation would be for a retracement down into discount, right? The only little caveat, or the wrench that's being thrown in here, is that we have a monthly bullish level, right? Which, and of course, the higher time frame, the better. Typically, you're going to see the most clean interactions with these levels on the highest of time frames, such as. So that's where I'm a little crossed, right? Historically, anytime that we've gotten that weekly imbalance, it has suggested lower prices. The only difference is when we do get those on the weekly time frame, we don't have monthly levels below it. So that's where I'm crossed up. And that's why I don't plan on trading or taking a prolonged trade on the indices right now. There are much better setups on these individual names that we can get into in a sec. So that's just kind of where I'm at with the overall market in itself. There are some names that look real good. There are some that look real bad, and we will get into a few right now. I want to kick off and start with, and of course, I'm going to actually incorporate the monthly here because we do have a monthly candle closing in just a few days here. So I'm going to incorporate the monthly, and we'll work our way down, because top-down analysis is a way to formulate the highest probability thesis for whatever we're trading. So, for example, if we have something that's checking out in whatever direction on the monthly time frame, great. Okay, let's say, for example, bullish. If we were to go down to the weekly time frame and that also checks out as bullish to us, even better. Let's move on down to the daily. Perfect. Okay, and then our hourly, we can wait for that to set up for a potential entry. And you can even go down into a much smaller time frame to be, again, as precise as possible in terms of your entry. And when we have all of those time frames lining up in the same direction, those are the highest probability trade opportunities that we're going to get. And honestly, those are the ones that we want to take. We don't want to get crossed up where you have a bullish monthly and weekly, but the daily still shows a retracement as possible for lower, right? That's not a trade that we want to take long in that situation, because we know that daily can retrace some more prior to giving us the real entry for that next level higher. So we want them all to line up. That's the moral of the story there. But first, let's start out with the ticker that our friend Seeker has brought up here, and this is LVS. Okay, so if we were to look at LVS right off the bat, we were looking from a monthly perspective, and let's just zoom out just a tad to see. Okay, so okay, so actually, believe it or not, we have a bearish structure on LVS right now, which it's not the end of the world, but this is a much higher time frame, longer distance type setup here, and this is what we're currently working with. Now, if we were to take a look at our most immediate move, okay, we will notice that we have relative equal highs. So what is that telling us? Relative equal highs in a specific instance would suggest, or just simply put, what had to have happened at this point right here? Well, somebody had to have sold that, right? Shorted it, right? It's the only thing that makes sense in order for price to drive down, right? So if that's the case, what had to have happened? Hold on, let me just fix that. Thank you. Okay. What had to have happened here, right? Same situation, right? Somebody had to have shorted that, right? It's the only thing that makes sense. But the fact that we left those equal highs above, that's sketchy. Why, right? If we buy into the idea that the market is algorithmically driven and price is going to chase, right? It's going to go for liquidity. That's the whole idea here. Then ideally, we would see these get swiped as double the pool of liquidity in this specific instance, right? So with that, we could take a look and say, all right, well, we have relative equal highs below, so I think we're going to get a shift in market structure ultimately. Okay, so now where would be an ideal location for a potential entry, right? So here's our monthly. That would be a bullish monthly fair value gap there. So ideally, Seeker, you'd kind of want this to get into this monthly imbalance and start to move higher from here and look for those relative equal highs, right? I know they're much higher. And again, this is a monthly setup here. So with that, this could take a while for it to play out the way that you'd want it, right? So let's go over down to the weekly now. And we'll take a look and see. Okay, very similarly, if we were just to map our range really quickly. So what was the low that took out this price, that high right there? From low to our high, we got our discount retracement. Very good. Yeah, so here was that volume imbalance that we bounced from the first attempt right there. Deep in discount. Now we have another coming up down here as well. Okay, so honestly, I would favor that. I would favor one more low, sweep these lows right here, and then from there, get up and get going. So that would be, where is it? Oops. Right off of the low at 43.72. Okay, and then beyond that, let's see. Let's just see the daily, for instance. See if we can get even more specific with it. Very similarly, yeah, you see there's a lot of relative equal lows here. So I'm thinking those get swiped. And from that point, I think we could start to move again. So I'm guessing since Seeker brought it up, I know Seeker is an options flow guy. When he sees interesting stuff pop up, that's when he tends to strike. So ideally, that would be the spot that we get on down to. Okay. And you'll notice, no bounces coming off of air. So that was the initial fair value gap. This is where we have a bullish volume imbalance right there, 43.65. So that would be an area of interest for me at that point. Right. So Seeker, hopefully that was insightful. If you saw anything specifically on it, feel free to drop it in the sidebar. So let's see. Jake is a hero. You are absolutely correct. Sushi, what's up, man? What's up, KD? Yeah, I can do Tesla for sure. DJIA, bullish. Okay, we'll look at that as well. Good morning, sir. And HD, let's look at HD too. Cool. I'm seeing a lot more people go on YouTube. Is the stream more clear on YouTube versus Twitter? I think so. And oh, Cajun, new member. Nice. Thanks. All right. Yeah. So let's do Tesla next. So yeah, that's just where my take on LVS there, Seeker. Hopefully that was helpful. All right, so here we go. Let's look at Tesla, and structurally still bullish on Tesla. You will notice that we got into a very sloppy bullish for value gap. Still, we swept this low. I ain't so sold on this being completely finished just yet. You have a monthly untouched bearish fair value gap right there, up at that from 205.60 to 228.20. If we were to come on over here to the weekly chart, you're also gonna notice, right? Earnings are not, you if you've been here a while or you've listened to any of my content, my thoughts on that. Earnings, yeah, just a way to get price to where it was going quicker. Why would we bounce in the way that we did? Oh my goodness, what the heck? Well, what did we just sweep? We swept the monthly low from 2023 back in April. And what had to have happened here? People had to have gone long. So if that's the case, their stop losses are sitting underneath, right? So when price gets down below there, triggering that liquidity enough to send price, right? Okay, so yeah, that is a good explanation for the reaction that we got. We're also very deep in discount too. So at some point, I really want to see Tesla take off. Is the time now? Could be. I think it gets really interesting up at that monthly fair value gap here, right? That's where things will get really I guess that would be considered my showtime imbalance, meaning it's either going to be the best short you're going to get or the quickest stop out of your life. So if you look at it from those two perspectives, that'll, I think, cleans things up a lot. But that's where I think Tesla's at currently. You're going to run into a pretty substantial level here coming up soon with a sweep of that 184.25. And ultimately, the next untouched imbalance that we have is not up until 215, right? So any day-to-day price action that occurs where we, stall out or fizzle, those are going to be lower time frame levels that we don't really anticipate carrying all that much weight anyways. So, so that would be Tesla. So we did turtle soup, right? So turtle soup would be a move in the inverse direction to take out a low. So an inverse of our overall trend. If our overall trend is bullish by what I'm showing you here, that move down below this low would just be a liquidity sweep in order to drive price back in that opposing direction. So that would be Tesla. All right, so let's see. Let's go to DJIA. Well, we can look at let's look at YM here. Okay, and I'm gonna go to the monthly here on YM. One sec. So we're looking at the Dow Jones. Okay, just like the others. Okay, I don't think this didn't get down into discount either of our most recent little run. Whoops, hold on. There it is. Okay, there's your discount retracement, run for highs. Beautiful, beautiful, beautiful. Okay, so I need to come on over here and draw or map our current range just like so. Okay, and you'll notice that we did not get into discount, but we are inside, or we did get into a bullish fair value gap here on the monthly time frame. And just like ES and NASDAQ, we put our dipped our toe in and we're leaving to start. So that is very encouraging for bulls to start off. Now from this point, you'll also notice I'll be interested to see if I'm bullish, I want to see price hold above 38698 to close out the month. That is previous all-time highs. If we can hold above that, that to me is extremely encouraging for bulls to continue this train, right? Now let's go down to a weekly time frame, and similarly you have that weekly imbalance. We also turtle soup this low, so again, sweep in liquidity in the inverse direction of our overall trend. There it is. Look at that. got into a weekly bearish fair value gap, and so far retraced to close out the week. Now we're going to find out how bullish we really are very shortly, but it is encouraging for bulls to have gotten into a untouched imbalance and ultimately started to move higher. Personally, I would have loved to see a discount retracement on all of these names, but we haven't gotten it yet. Still not out of the equation, but could happen over the next couple of weeks. And I think, unfortunately, this choppy PA is going to continue for a little bit longer. So that would be Dow. And Home Depot is another one that Katie brought up here. So let's look at Home Depot. Okay. Oh, nice. So our overall trend on Home Depot, bullish, low to your high. You got your discount retracement. Sloppy, but there's your bullish fair value gap starting to run higher. And if we were to draw this most immediate price run we got right here, look at the rejection off of the monthly bearish fair value gap, low to our high. We got our discount retracement into a bullish imbalance down here. I know KD is salivating right now. You do have a monthly discount right here that we're currently in. You got one more below, but I'm not so sure that one gets tagged. That could be a breakaway gap right there. So yeah, this setup is nice. Now you have relative equal highs, right? I know you're going to say relatively equal. There's 24 points in difference, right? The idea here is that we rejected here, right? Leaving this without any imbalances in between this run higher, right? So we could see something called a low resistance liquidity run, which would essentially be a sweep of that 396 and a quick jump over the next couple of weeks up to that 420.61 with minimal levels of resistance in between. Now, similarly, I'm sure you're going to see, yeah, okay, even better. So if we're to look at Home Depot, this is a setup we love to talk about over in the group, and this is our bullish breaker. Okay, so here's your low, high, lower low, and a break above, up, and through. That high of the sequence would create something called a bullish breaker. When we get to Mara, I'll show you the efficacy of the bullish breaker. And that's where we currently sit. We've rebalanced all these inefficiencies down here in that level currently. Whoops, hold on. There is another fair value gap under, but we got into that volume imbalance right there, got into the fair value gap. So not bad at all. I didn't realize that Home Depot got spanked as much as it did. And even more precision, check out the weekly volume imbalance or gap down, showing you urgency to move lower. Price gets up into it for the first time and ultimately gets smoked. So all good, all great. Here's your current range from your low, whoops, to your high. We are currently in discount of that range beautifully, right off 50% of our weekly range, right at the breaker. Yeah, Home Depot, nice setup here, Katie. Good find. And that would be, of course, a weekly trade. So take that into consideration when you're thinking about these setups that are occurring on a higher time frame. Of course, if you want immediate action, you're going to have to come on over, and apologies for these levels here. But if you want immediate reaction to specific points, you're going to want to see smaller time frames. And very similarly on the daily, there's your low to your high, no discount retracement until here. Good. We are sitting in discount. There's a volume imbalance there, down in discount right off that 329 level, and so far so good. You got a lot of imbalances above, but this is a bullish trend. We don't really anticipate them to cause much trouble other than maybe a little speed bump in the process. So yeah, Home Depot, very solid, very solid, very solid. Okay, I think another one that just came up, let me come back over here to the other chat. Oh, cool. So we're seeing a lot of other ones. Cool. We'll get into a bunch more. So and apologies, of course, if you are currently throwing in some of these names down here. I will get to them eventually. It's just sometimes they get backed up. So yeah, we could do Cat and we can do Meta for sure. Okay, so let's look at Caterpillar first, and then we'll go to the next. All right, so just right off the bat, low to our high that took out these sets of highs right here. You have your discount retracement into, hold on, there's one, and here's two. Discount monthly imbalance. There she blows. There's your run for highs. My model is complete. Okay, that's one. Now let's move on over to the next. Low to our high. We took out this high, these highs, right? Relative equal highs. Look how price reacts to relative equal highs. 1, 2, 3. There's your discount retracement into a monthly bullish imbalance. And your Mando model is complete for the second time. Thank you very much. That is 2. Now, wait, one more time. Okay, what was the price run that took out these highs right here, or this high, I'm sorry, from low to high? Here's your discount retracement into a bullish imbalance right here, and there is your run for highs. So the Mando model is complete yet again. And now we move on to our next. Do we know for certain that this is the high? Not necessarily, no. We would prefer a monthly, or I'm sorry, an imbalance on whatever time frame you're looking at, because this model works on any time frame, doesn't matter. But if you're looking at it from a monthly perspective here, right? Do we know 50% is absolutely necessary here? Nope, not necessarily. Why? Because we do have a bullish imbalance right here, so we can justify that price getting into it and getting out for sure. I will say that personally, I like when price gets into discount, because I know the efficacy of the model, because it happens over and over and over again, and we can backtest that. For me personally, I like when it gets into discount. Not quite there, and that's okay. But just for reference, not specifically a setup that I would take, but not a bad one. You have a bullish imbalance right here. Let's go down to the weekly and see if we could be a little bit more precise. Caterpillar, very similarly, a pretty large range here, but you also don't have a weekly imbalance forming either. So you might see me putting fibs. I do not use fibs without imbalances. Sorry if anybody used them. I don't see how they work consistently, just saying. So you might want to just kind of brush up on what imbalances are and how price reacts to them. As you can see, bing, bing. Okay. But here is where we currently sit. Okay, and you'll notice we had weekly relative equal lows that we just popped last week, got down into a bullish fair value gap. So we're taking out liquidity from these 2 weeks, March 4th and March 11th, right here, back to back, sweeping those lows, taking out that liquidity in order to drive price higher. So far, so good. So yeah, do we know that this is the end? No, not necessarily. We could very well run back up for that 382. That is absolutely a possibility. But again, just not really a setup for me personally, because I am kind of strict with the criteria in order to enter and exit. That is kind of my take. And, as all really, oh, whoops, I just clicked on my own thing. As you know, I would prefer to be stingy and really rigid with my entry structure. That way, I don't get caught up in trades that I don't really want to be a part of anyway. So that would be Caterpillar. All right. So let's slide on over here and we'll look at Meta. So Meta, I know for a fact, got into our weekly discount, but nowhere near discount on our monthly. So very similarly to how we would view something like Caterpillar, where you have a nice run. Ready? And let me just map out all these imbalances on the way higher. We got a ton of them. And I'm actually going to show you guys something funny on Meta, because Meta was literally a 10-year Mando model that played out. And we'll get to that in a sec. So hold on. There it is. Okay. And one more. Okay, so again, very similarly to Caterpillar, we are in a bullish imbalance here. Is this a trade that I would particularly like or take? Not necessarily, no, probably not. But let's just take a look here and see our current range is set. Okay, here's something to note. We have a bullish breaker, low, high, lower low, and a run up through. We now have a bullish breaker, so we would use the high of that sequence as our breaker candle. To me, I would prefer these breakers to be in discount of our range. Specifically on the monthly, you're going to notice that your weekly range is going to be different than what it looks like here on the monthly, and that's fine. I'd prefer that breaker to get down into discount, so potentially one more leg higher off of this imbalance, which would be crazy after the beatdown that it took the other day. Let's come on over here. and look at the weekly. So if we were to draw our weekly range, whoops, hold on, let me just fix that out. Okay, whoops, one sec. That's our monthly range here. Here's your weekly. Okay, so what was the price run that took out our all-time highs back here in April, or when was it? August of 2021. That's good. Okay, let's go from our low to our high. Hit our discount, bullish imbalance, and so far so good here on the weekly time frame. Yeah, not bad at all. No weekly imbalances formed just yet. So next week, you really want to see this snap back higher and prevent a weekly imbalance from forming. That would be encouraging for the bulls. But yeah, from a weekly perspective, not bad. If you were to look from the monthly, at some point we are going to get that retracement. Is it now? I don't think so, really. So that would be Meta. Just pretty interesting how that all shakes out, right? But yeah, so I wanted to show you guys this because this is the funniest thing. So if we're just to go back all the way in time here on this weekly time frame on Meta, you're gonna notice that that bear market back in 2021, all it really was just a discount retracement. So ready here. If we're to look, okay, so our price run to take out these highs here would be from this low to that high. There's your discount retracement. Whoops, let me zoom it up. Okay, into a weekly bullish imbalance, and we're in the year 2012, just to show you guys how it don't matter. This is going to work. It's worked forever, and it's going to continue to work forever. There's your retracement to discount. There's your run from highs. Okay, so here you go. Nice, your next price run. You're going to notice here we do not get a discount retracement for about 10 years. So ready? Just keep on going. And this is how we map a range, right? Continue to go to the high of the candle until you see that retracement to 50%. Our range is not set, right? So I know we've been a little spoiled because we have gotten some weekly retracements in the process here when we crunch it and look at a more shorter time duration. But look at all of this. Look, even here, ready? Check this. Oh, no, come on, come over here. There it is. No discount retracement, still hasn't hit 50%. Now here we go, continue on higher. Whoops, one more high. Oh, come on. Here. There it is. No 50%. Whoops. No 50%. Aha, there it is. There is your discount retracement into a weekly bullish imbalance, sweeping these lows right here, and ultimately turtle souping and running for your highs. Mando model complete. It only took 10 years for it to set up, but it just goes to show you bear markets don't shift market structure. Okay, bear markets are just retracements into discount of our overall range. So, and that's why the stock market is rigged to the long side, folks. So if we're to look at this, of course, I had a much shorter time duration in terms of my range set, but our monthly range would suffice in terms of where our ultimate discount is. These imbalances here are just showing you that when price gets in, it doesn't necessarily have to retrace immediately. There are imbalances here, but for me, as somebody who's looking to, or would be looking at this from a long-term investor, I would ideally get a discount on a much higher time frame, which we did not get here. But so yeah, there would be that would be Meta. So we'll keep the train moving here. So for anybody who is new here, welcome. If you want a free month membership, our friend Jake Lake Seeker sponsored 15 memberships. If you want to enter and potentially win one of those, drop into my Twitter account and you will see the rules for entry. It's not a hard one, but yeah. So let's see. We're gonna pick those winners later today. All right, let's look at NVDA. Okay, NVDA. So obviously you're going to see insanity here. This is your monthly time frame, massive run higher. Got into our monthly imbalance here. Not quite discounted, but nonetheless a monthly imbalance. And so far, so good. If we were to come back over here to our weekly time frame on NVIDIA, a whole lot of the same. Huge extension of the range from your lows down up to your high that take out the most recent highs. So still in premium or over that discount threshold, which is fine. No weekly bearish imbalances have formed. Okay, now let's come on over to the daily, and this is where it gets real funky because I think we're going to see 974 on this sucker here. All right, so here's NVIDIA. Beautifully done. Okay, so there is your low to high. Here is your discount retracement into a daily bullish imbalance, and so far so good. We're running up higher. Now, if we are to take that 907.39, I have that marked, that would create a daily bullish breaker. Okay, not quite there yet. We have relative equal lows. So to me, NVIDIA is one of my favorite setups heading into next week with that 907 relative equal highs just chilling out there. Okay, only untouched imbalance we have left is 932. And from that point, it's just one imbalance with relative equal highs yet again above. We know how price reacts to those relative equal highs, so I think that'll be an easy chase. And ultimately, I think we're going to see 1,000 on NVIDIA relatively soon because a lot of last week's nonsense, basically all of it, got erased for the most part. So that's why I wait for that imbalance to form in order for me to look for lower prices. So that would be NVIDIA. Now let's continue on. We can go over to CELH. Okay, let's look at this one. I'm not sure I've charted this one in a long time, but I know it actually did recently take care of business. Okay, so just we can look all time, low to high, discount retracement into a bullish imbalance. Whoops. There she blows. There's your run for highs. My model is complete. So there's one. Ready? Here's another one. Low to, whoops, high. Ready? Bing. Discount retracement. Run for highs into a bullish imbalance right there. Thank you very much. There's your run for highs. Bingo. Mando model complete. Now for your next one. Low to your high. Whoa. Not quite your discount retracement yet. What does that tell you? That tells you that the range is just not set. And that's fine. Okay, so here it is. So ideally on CELH, I would see 63.18. Not so sure that happens, but that would be cool. And if you were to get that, that would be your discount retracement. You have multiple bullish imbalances down here. Here's one, and here's another. And there's your test into it and run. So that would be your monthly on CELH. Now, if you're to look at the weekly, you're going to notice that we actually did complete on the most recent time frame. So let's zip on back. Hold on. This is what we currently sit at. We are in discount of our weekly range. Beauty. Okay, there she is. Boom. Okay, now if we were to go back and just look at this setup here from our low to our high, there's your discount retracement, there's your run for highs, right? So you see how there's little variations to the monthly versus weekly, and that's why it's important to be able to scale through multiple different time frames in order to make the most educated decisions. But we are in discount of our weekly range. Very nice. You formed a weekly bearish imbalance here. Okay, so that's not ideal. But above that, you got nothing, and we've satisfied that weekly discount right now. So again, you can either look at it from a monthly perspective where you'd like to see a little bit lower, which is about 63 bucks. At that point, I would anticipate that, but ultimately this ain't bad. The most bullish thing that could happen would be for an immediate rebalance. So what that means is for us to shred up through what is now a weekly bearish imbalance right here. Shred up, get up and through that, and take off from that point. Something that I would not be shocked by would be something like this: in, out, sweep those lows, and then something like that. That's what I would envision, at least. Could I be wrong? And could this immediately go higher? For sure. But I think at that point, that would be more than enough for price to run back up to those highs. So that would be CELH. Thoughts on TTD? Okay, so TTD is still a beauty. Here it is. Okay, so you will notice that we have, I'm just going to draw this out for you guys so you can see. All right, so price run that took out our previous all-time high was from this low to this high. Whoa. Okay, discount retracement, check. Bullish imbalance right here. I got to fix that. Whoops. I'm going to make this green for you. There she is. Okay, beauty. See where my alert is? Look where we closed. Woo! So we got into that monthly bullish fair value gap right there with that low wick. And so far, so good. My model would complete at 114. Now you're going to notice that the target is a little different here on the weekly time frame. So here's your weekly, just a beauty. There it is, low to high, discount retracement. My model in this most immediate price run here on the weekly would complete at $94. From that point, do we have any imbalances? Yeah, no, we don't. No imbalances up until that 114 mark. Not sure when earnings is. This seems like a name that would use earnings in order to drive price higher. So that's TTD. Still one of my favorite setups. I am a hodler of this one, just to be fair, but just a beauty. Turtle soup right there. And ultimately looking for that move up to 94 at the very least, 114 to complete. So that would be TTD. Now let's see. Mara. No, we did not do that one yet. So let's keep on rolling. And this was the I said it last week. I said it. Just do it. Type in at MandoTrading money sign Mara. You're gonna see Mara is the best setup going into next week, and it's not even close. And I don't know percentage wise if it actually turned out to be the best, but pretty great. Okay, so here's your Mara setup. Here's your monthly range. Beautiful. Okay, so while we're still inside what would be a bearish overarching monthly range, we do have a bullish run inside here, and we have yet to get up into that 50% of our range right there at $43. So ultimately with that, with that retracement down into discount, specifically that monthly bullish imbalance right here, price got in. You'll see if you go back, that's the exact tweet when we got in there. And so far, so good. We touched 20 this week, and ultimately, my model here on Mara completes at 34.09. If we look at it from a weekly perspective, you have your low to your high. There's your discount retracement into a bullish volume imbalance, turtle souping those lows and running to start bullish volume imbalance off of last week. So that would be an area in which if price were to retrace down into, we'd want to see hold. And if it doesn't hold, then you have an out on your trade. Everything is well defined, right? So if your entries are down here at $14, $15, and you have that imbalance fail, then you know, all right, I'm still in the green. I still take my win. But ultimately, I think we chased 24 here with the lack of imbalance at this point. Specifically, I think we had a really small one right there. Yeah, we did. Just to justify where we kind of pumped the brakes on the weekly. We have relative equal highs on a smaller time frame. So if I were to come over here onto the hourly and show you guys, yep, there it is. And just for reference, just so you guys see that my model works on any time frame, it doesn't matter. Ready? We took out highs right here, low, high, discount retracement, bullish order block, run for highs. Mando model complete. That's one. Now on to the next. We took out these highs here with that price run. There's your discount retracement. Here is your bullish imbalance here. Again, we're on the hourly just to show. It works on any time frame. It doesn't matter. It's not just exclusive to the weekly or the daily, even though higher time frames are, preferable for the highest probability setup. There's your run for highs. My model is complete again. Here's your low to your high. Notice how we didn't retrace into discount. And this one was ironic because this was the start of the week, right? We gapped higher. Notice how we didn't get into discount, okay? Right at this imbalance right here, I had someone in the group say, hey, is Mara still the setup of the week? That was your entry, pal. Discount, bullish imbalance, run for highs, Mando model complete. Okay, here it is. Low to your high. No discount retracement, okay? So worth noting, right? So if we don't retrace into discount, big ranges do create large retracements. Here's your there's your high. There's your discount retracement, 50%. There's your bullish imbalance right there. There's your run for highs. And relative equal highs. We stopped dead short in our tracks, which is fine. But notice how we got back into this bullish fair value gap and reacted quite well. There she blows. Okay. So we have relative equal highs up here at 2003. We also have 2045. That would be buy side liquidity. That dates all the way back to April 4th of this year. And then we have one level in which I think could actually create another range, meaning I think when we get up into that 2099/2166, we could retrace back down into this area prior to running higher again. But still an excellent setup. Retracements come as a result of creating large ranges, right? If you're in something and you're plan on holding it for a long period of time, if your expectation is that it's going to continuously go up without retracing into discount at all, you are out of your mind. So that would be Mara. Let me come back over here. Florina, we just did the video. So at the end of this video, if you would, it's at about 35 minutes. So if you were to go back and look about 35 minutes in, you'll be able to see. Okay, so we can do AMD next. Yeah, sure. So AMD, very similarly to that setup that we got on NVIDIA. There it is. Oh, man. Oh, man. Okay, so there's your low to high discount retracement, bullish imbalance here on our monthly time frame on NVIDIA. You will also notice we have a monthly bullish breaker. You have a low, high, lower low, and a run up through highs. This candle would be viewed as our breaker. Notice how price got into our breaker, and so far so good. There she blows. So my model on AMD completes at 227 here. Could it take time? Absolutely, right? We don't know the overall so far, the overall direction of the market. Can we see something like this if we were to retrace into discount of our monthly range? For sure, still within the breaker, right? That's the catch, right? And if you're trading off a monthly time frame, you're going to want to give yourself some time there. So now here's your weekly on AMD. Now I drew this out here, right? So far so good. I'm not so sure this happens. This could very well be the case. Okay. I just drew that as a result to show that there is an untouched bearish imbalance right there. So that's all it was for. But we are in discount. We have our weekly bullish breaker, low, high, lower low, break above that high of the sequence. We use that as a support level moving forward. And so far, so good on that as well. So AMD solid. Let's go over to the daily, deep in discount. Beautiful. Okay. Got into a bullish volume imbalance or a gap higher. Okay. There's your gap. There's your retracement. And then there's your run. What else is this? Oh, wow. Low to your high. We took out these highs right here with that price run. There's your discount into a bullish imbalance. There's your run for highs. Mando model complete on the daily time frame. So I'm rattling them through all different time frames because it doesn't matter. Any time frame you want, it's going to work. With a very important caveat, and this is why I think you should watch the video, or learn it. But it is important to match higher time frame bias with what you're working with. And if there is no imbalance in discount, there is no trade. That's my biggest thing, right? I don't trade off of fibs. I don't think they're useful unless there is an imbalance there to go with it. So, but yeah, this would be AMD. I mean, we can even crunch this down onto a smaller time frame and just see where we're matching up. Oh, wow. Low, high, discount retracement into a bullish imbalance, run for highs, Mando model complete. Very nice. There's your hourly. Okay. So now here we go again. Okay. And no retracement into discount. So is it a possibility for us to retrace down into discount? It is. Okay. Now here's where it gets a little shady. Okay. Looking this run higher. There was not one imbalance, not one that was formed in this run. Okay. So I would prefer for us to expand without retracing into discount just yet because we don't have those imbalances here on the hourly time frame to kind of assist. Let's go over here just really quickly. 4-hour imbalance was tagged and we ran. So yeah, I would prefer price to get going without the need to retrace into discount because we're not really working with all of that much other than a low, high, lower low, break above. That candle can be used as a level of support moving forward. That is a bullish breaker right there. Okay. So that's really all we're working with down there in discount. All right. So that's AMD on the all time frames really, but So let's keep this train rolling. Let's see what else we got. WSO. All right, let's look at WSO. I don't know what this one is. Watsco. Okay. Oh yeah, the ticker that doesn't stop going higher. Yep. Okay, so here we go. Let's look. We took out these highs over here with this price run. Okay, no discount retracement. Okay, there it is. Discount retracement. Check. Bullish imbalance. Check. Run for highs. Check. Mando model complete. Thank you very much. Okay, so here we go again. There's your low. No high. Okay. Still haven't set any sort of range. So that's okay. But here it's oddly enough, we really haven't formed many imbalances to the upside throughout this run. So I guess that's worth noting at least. You got your fair value gap there, and that's about it. Yeah. So not many imbalances here on this name, but at what point does it turn around? That's a great question, right? So here's something that you can take away from what I'm saying to you now. And if we're at an all-time high and we're currently in price discovery, right? It's fair to say. At what point do we start to turn around? Well, we don't have levels up there because price has never been up there, right? So at that point, it's going to take somebody trying to get out, and that'll set the stage. That's currently where we're at in NASDAQ. And when you're trading those all-time highs, it does get annoying to trade. I will give you that. But anyways, here's that WSO. This turned out to be a sick setup for last week, Katie. I don't know if you traded it at all, but there is your, whoops, hold on. Boom, boom. Okay. Here is your low to high, discount retracement, bullish imbalance, run for highs, Mando model complete. Let's go one more time. Low to our high. Here's your discount retracement into a bullish imbalance. This is a volume imbalance, but there's that. Okay. You also had this inefficiency we didn't get into, but that's okay. Oh, yeah, we did. There it is. Gone. Mando model complete. So, yeah, if I'm in this, right, at this point, I would want to see it expand higher at this point and continue to run, because if we were to make a move, ultimately not creating an imbalance and a shift in market structure would occur at 396. So wouldn't want that. But that would be WSO. Wow, what a run there. Okay. Oh, 387 was your entry. Nice, man. Yeah, well above that. Okay. All right. I see there's a few more underneath. Again, if you were wanting to get something charted, just drop it down below. We're catching up now, so we're not all that far off from where we need to be. It might take a few minutes for me to get to the one that you just typed in, but I will get there. And Seeker, Jake Lake, he was here. I'm not sure if he's still here, but he has sponsored 15 memberships to the group. If you are interested in joining for a free month, check out my Twitter. There's the rules for entry there as well. So just wanted to inform you, those of you that are in listening right now, that want to learn how to do this the proper way without needing alerts, because alerts are poison and you will not be successful long term if you are trading off of alerts. Sorry, it's just the way it is. Never hear anybody who's getting rich off alerts and not giving it back 2 weeks later. All right, so let's go. AVGO. All right, that's another one, another semi. So here we go. Monthly. Yep. Okay. Just like you're gonna notice a lot of similarities between a lot of these and NVDA and the rest of the gang over there. But hold on, let's just see something really short or quickly here. Okay, yeah. So it did complete my model there on the monthly time frame. Ready? Whoops. Low, high, discount retracement, bullish imbalance, run for highs. Beautiful. My model is complete here on the monthly. Now let's move it on over. And now this is another one, quote unquote extended. Does that necessarily mean it needs to come down just yet? No, it does not. But let's just mark these to be fair. There you go. There you go. Okay. And one more time. Whoops. Here's another. And you also have a bullish volume imbalance here. There. And that's the one that we got into and started to run a little bit off of. So that's where we currently sit on the monthly. Of course, extended, that would be a situation where it's like, yeah, I ain't trading this on the long term. But very similarly, you're gonna notice here is your low to your high. There's been no discount retracements on this sucker in a very, very long time. That's okay. Does not necessarily mean that it has to come out. But now you're going to notice that if we go to the daily, the range is going to be much tighter for us. And let me just remove. Okay, so now we're to come back down here and look at our most recent price run. Okay, let's look. We took out this high here with this price run. Okay, beautifully done. Low to our high. There's your discount retracement. There's your run for highs. Okay. Actually, believe it or not, we didn't even get into discount on this run here. Yikes. There you go. Yeah, we didn't even get into discount there. So still hovering in discount of this range as well. And here is, I guess, your bounce level. How can you justify the bounce from that point? There it is. Swept those equal lows right here. Now making the run ultimately for these equal highs. 1, 2, 3, 4, 5 equal highs up here. 1438 would complete my model on the daily time frame. So that would be AVGO. Another monster. Sheesh. All right. So that would be AVGO. All right. Let's look at Boeing. BA. All right. I think Boeing actually had an ugly shift. Yeah. So, all right. Well, if we're to go back on the monthly, here it is. This dates all the way back to 2009. Holy. Ready? Let's just make sure. This has been a while since I've charted this one. Okay. Nope. 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 Yeah, no. No discounts at all. All right. So, oh shoot. There you go. Let me fix that. Okay, so overarching bullish trend, just worth noting. You have relative equal highs above, which is kind of ironic. And now here's where it really gets interesting. So if we're to zoom in here, if our overall trend is technically still bullish, whoops, hold on. There we go. All right, now, and we see that we have these relative equal highs right here. One, oh shoot, my clicking is off right now. There you go, here's two, beautiful. There is your price run to take out that high there from low to high, discount retracement, run for highs. Beautiful. Okay, there she is. Mando model complete. Okay, so now are we looking at a turtle soup situation where we're going to run for those equal highs above? That's the ultimate question, right? Here is your bullish imbalance. And ultimately, this trade is structured just like every other trade that we ever take. They're always, always, always structured. What does that mean? Well, if you plan on taking a trade off this monthly right here, let's zoom in. Okay, and you're targeting those equal highs, and ultimately that bears fair value gap right up there at 297. At this point, your trade is pretty well mapped out, right? Okay, your entry is off of the bullish imbalance. Your stop loss can be set below the low of the candle that created that imbalance, and you're looking for the highs as your take profit, right? Simple as that. And prior to entering that trade, you could say to yourself, okay, this is like a, let's see, what's the exact number? This is like a $26 risk per share for a potential $100 at the very least in profit. Does that make sense to me at this moment? If it does, fantastic. That's a trade opportunity. If it doesn't, go look for something else, right? You don't have to trade anything, right? And that's where I think a lot of people get crossed up. They say, "Oh, the setup was so good, but that loss hurts." Well, if that loss hurts, that should be defined prior to you even entering the trade, and you shouldn't even be in it, right? Because you can kind of forecast where you're at, in terms of, oh, I know this is my potential risk in this situation. So at that point, why even take the trade if you know that loss is going to hurt? You know it before it even happens, right? It's all there. It's all structured for you. So yeah. So let's see. Let's keep on rolling. So that's Boeing there on the monthly time frame. Weekly is this very similar situation with the turtle soup. I'll show you guys really quick, but there it is. Here's your weekly bullish imbalance right here. And you got a few more weekly imbalances down below, but ultimately you really just wouldn't want to see Boeing lose that monthly fair value gap. And if it doesn't, it's good. All right. So there you are. That's where you currently sit on Boeing. It's been a dumpster fire for a while, but and this is an order block, but there it is. So that would be Boeing. All right, let's keep on moving. If you're listening right now on X, shoot that hit that retweet. Would appreciate it. Yep, so the promo is on the promo is the promotion that Daniel is talking about in the comments right now. It's just one of the members in our group, he's actually paying 15 people's first month. So if you want to join in, just drop your go into my Twitter account, and from there you'll see the rules for entry. It's just comment your current strategy, what you want to improve on, and we're going to pick those winners later on today. So that would be Boeing, and thanks Liz for the retweet. I appreciate that. Thank you, Sergio. Appreciate everybody who's listening, of course. And if you guys have tickers, feel free to drop them in on there. So Tyler, I just did AMD a little while ago. So at the end of this, or I don't know if you can do it live, just go back and you can hear the analysis on it. It wasn't that long ago. It was who asked for AMD? Well, we can look back that way and see. B stocks asked for AMD a little while ago, so wasn't maybe 3 or 4 tickers prior to this one that we just did. So that's BA. Sorry, I skipped the. Did I? No, I didn't. No, we did Boeing. Good. We did NVIDIA. WSO we did. Okay. Amazon. Amazon is next for Daniel. All right, let's go. Let's look at Amazon, and if you want to laugh, go to Amazon and just type in at Amazon or at MandoTrading $AMZN and just see my post on that. It was from February. We said 188 and we got there. So relative equal highs, guys. See? Yep. So that's what happens when you see relative equal highs. Now here's the scary part. We got relative equal lows down here. That's terrible. But nonetheless, low, high, lower low, break above that. You can anticipate this high in the sequence to act as a support level moving forward. That is a bullish breaker. There you go. Here is a bullish fair value gap right here. Okay, beauty. Okay, and this is what we're currently working with. We got into a monthly bullish fair value gap right here, and so far moving out of it. Do we see the expansion into that next leg higher? Potentially. Now, here's the thing about Amazon. Anytime we're at that all-time high or in price discovery, right? That's where it gets difficult, because what would be our target price at this point? We've already taken out all-time highs. Well, the immediate target could be our previous high that we just set, this month. But beyond that, good luck. Good luck trying to pick an exact number. Anybody who gives you an exact number, I think, is out of their mind, right? They're probably just using some sort of Fibonacci extension or something like that. And I've still seen zero evidence in which that actually plays out. So, but that's currently where we are on Amazon. Like a lot of the others, just recently took out all-time highs, got into a monthly imbalance, and so far so good out of that. Now let's look over here on the weekly. Very similarly, we're not going to be in discount, so it doesn't really meet the criteria for my model at the moment. So here's what we have on mine: from your low to your high. Discount still way far away, but again, that doesn't necessarily mean that that's that needs to happen at the moment. We do have a bearish weekly imbalance right here, so that's interesting at least. But these imbalances that formed last week, they are weekly setups inside an overarching monthly, and a lot of these monthly charts look bullish. So despite that bearish weekly level forming, I want to see the reaction to it, right? If we are to shred through that and get above this bearish imbalance right there, that's one of the most bullish setups you're going to get. You're going to get a balanced price range in that case. And if you have enough sauce to get through a previous bearish imbalance, right, in one shot through a bullish imbalance, not only, so it's almost like double the amount of order flow that's coming into that specific level. So that is extremely bullish. So that's going to be showtime imbalance. It's either the best short of your life or the quickest stop out of your life. That's the way I look at that. So that would be Amazon. Now let's see. Let's come on over here and continue. Hold on one sec. Sorry, I just gotta answer this message. Okay, so let's keep rolling here. All right, if you have any tickers, feel free to drop them. We're catching up pretty good right now. So let's look at Riot for I am game. All right, let's do it. Riot, very similarly. Last week I jokingly said Mara, best setup in the market. And I wasn't kidding. I mean, it was pretty beautiful. But if you look at all the miners, they really did have good setups, Riot and CLSK included, even Coinbase. Coinbase just didn't really meet the discount requirement for me to feel even better about it. But here's what you got on Riot. We got into that monthly discount bullish imbalance right there, and the expectation would be for a run to 2065. You do have a monthly bearish fair value gap up at $24, but yeah, so far so good. Looks nice. Come on over here to Riot as well. There she blows, right? And ultimately, you actually do have a little weekly bearish setup here on Riot, but you did have the bullish breaker setup that oftentimes will signify that we are going to shift market structure. And at that point, we turtle souped multiple lows, got into that discount, held the bottom of the breaker, and so far so good. All of these bearish levels overhead have been filled to this point. So yeah, I'm hot on miners. I think the miners are going to keep on blowing the roof off this place. And here is this weekly bearish imbalance lines up with your monthly bearish imbalance as well. So that's what you're currently at with Riot. Yeah, I mean, all of these miners, man. I know I just did Mara, but I'll do CLSK. I know Mr. Surface loves CLSK, and that's facetious. That is not true. But if you were to look at CLSK, here's your setup for a low imbalance. We retrace back into that monthly imbalance, and yeah. So at the very least on this one, it actually has the least amount of upside out of Mara and Riot, in my opinion. Could we see 42? Yes, but I don't think it would be in that same price run that Mara hits 34 and Riot hits whatever it was, 20 or something like that. So yeah, that's CLSK as well. And this is a bearish level. I need to change the color of that just for reference. Look at the rejection. Wicks give you the heart attack. Bodies tell you the story. Bodies held below that level perfectly. So that would be CLSK. All right, let's keep going. Yep, we did Amazon. Oh, they have earnings next week. Got you. So let's keep on rolling. Oh, okay. So let's just stay on this topic while it's here. I see Daniel who said, why Mara specifically? Yep. So Mara, that's just a position that I've traded for a long time. It's my favorite out of all the miners. Thank you to Mr. Surface for that. He's given me a lot of great DD on that company in comparison. And, I don't really care about any of that stuff, to be completely honest with you. I think it's all bogus. But if I'm going to be swing trading shares on something over a long duration of time, I'd prefer it to be a company that's not going to, or doesn't have a history of diluting when things are going well, like CLSK did. And to me, the setup on Mara was just way better, or even than Riot was. I know Riot had a nice move, and it still probably will continue to have a nice move, but overall, I think Mara was the best one. And as you could see, I've played this multiple times, and here's my tweet from October 26th. Please tell me you see it. And that was from 774, which ultimately ran up to $31. So that was my first leg of the trade. And what I do here is, until I get to 50%, which is 43.28, I actively manage this position in a way where on these rips, when I hit these specific levels, I take some off while still holding a core position, wait for the retracement down into a discount imbalance to complete my model yet again, and ultimately re-add. So that way I still have some skin in the game if we were to blow through this level, but all at the same time, I don't have a full position, so that when we do get that retracement, I have some powder to re-add and play for long again. So my ads actually this last time around on Mara were up above. They were in that 18 vicinity. I thought we would put our foot in the ground after taking these lows and make the move higher, and I was wrong. We ended up getting deeper and getting into the monthly fair value gap first. So it's fine. It's shares. It's good that you're not fighting the clock. That is a big plus. But yeah, ultimately, Mara's been the one for me for a long time now, and I've had some great success with that one. So let's keep on rolling. Let's go to Wing. Ryan Surface, another Surface delight here. Let's see. This monthly chart is not going to matter, but yowza. Wingstop. Who would have thought, man? Who would have thought? All right. Well, Surface would have. He's been talking about this one forever. So the run that took out these highs right here from your low to your high, we did not get into discount. Okay. Why did we bounce there, Mando? Every single move that happens on this chart is justified. I promise you that. Once you learn how to do this stuff efficiently and properly, you'll notice every move can be justified. And then there's your run. That's a bullish order block that forms off this bullish imbalance and ultimately runs for highs. But it does not complete my model because we didn't get that discount bullish imbalance. So that's fine. But this is currently what we got for a range. Massive. Okay. At what point do we start to turn around and move lower? It's a great question. Once I see an imbalance to the downside, I'll feel good about it. But until then, this is in price discovery. No one really knows, right? Unless people faking the Fibonacci's and saying, "Oh, look, we hit 2 standard deviations," and then it's like halfway through, right? Or this will be their second. Oh, it hit 2 standard deviations. It's time to come down, and now it's like $50 higher. You see, it's like it's not actionable. It's not a viable strategy in my opinion. So, but that would be Wingstop. Yeah, just an absolute monster. Who knows when that thing is stopping. So now going to the next, if you're in here, you like the stream, please share the Twitter link, hit the retweet button. If you want to join the contest for the 15 individual free month memberships to the group Galaxy Trading, check my page and you will see the criteria for entry on there. All right, let's keep on rolling. CMG, absolute monster. Amazon, yeah, we did Amazon already for everybody that was asking. If you want to go back and look at that one later, go for it. Here's CMG, yet again, another monster. So if you look at that most recent run from low to your high, there's your discount retracement into your monthly bullish imbalance. The Mando model is complete on CMG. And now from this point, we are in price discovery yet again. So we are all the way up here. Yeah, need some sort of retracement. Is that tradable? No. I mean, could it continue to go higher? Yeah, for sure. I'm not trying to say that. But are you going to just buy shorts because you think it needs to go down? What if you did that here? You're stopped out. What if you did that here? You're stopped out. What if you did that here? You're stopped out. What if you did that here? You're stopped out. So not a viable strategy. An imbalance to the downside would make me feel pretty good about that. And you haven't got one. See? Yep. So CMG just really untradeable to me at this point. Can it continue to run higher? Absolutely. But you're in price discovery. So who knows when it's time for that retracement. There's no real tell. So that's CMG. Snowflake. All right, let's look at Snowflake. No, spelling it right would help. Okay. Snowflake's got to do something big over these next 3 days. I'll tell you that, because this setup right now is ugh. Okay. I'll show you on the weekly. It looks a little better, but losing this monthly bullish fair value gap is no good. And creating a bearish one on top of that, no good. No good, no good, no good. So ideally for bulls on Snowflake, you'd want to close over the next 3 days inside. So at 166. Losing that, and I'm thinking all of these equal lows get cleaned up. And I know it sounds terrible, but you can't lose that monthly fair value gap. Now coming over here to the weekly. Similarly, okay, I have this purple line here. Let's Let's see where it goes from. I think this might have been a dark pool level from a long time ago, but irrelevant to us at the moment. But you see how deep in discount we are? Taking out that low, that shifts market structure bearish. Okay, on a weekly perspective, we don't want that as well. But last week we did end up turtle souping, so paramount that we can get at least into that bullish fair value gap on the monthly. And I kind of like those odds, over the next couple of days to look towards Snowflake making a move higher. Look at the weekly, look solid, holding on to this. And what I mean by solid is not a great setup, but in terms of risk reward, it's not bad from this point. Here's your daily chart on this as well. Hold on, let me remove all these old crusty levels here. But now, did we take out that high? Ooh, not quite. Okay, that's fine. But ideally, if you were to see some sort of retracement into this daily volume imbalance or gap higher, right, we would look for retracements inside that area for the next leg higher. If we were to come down to the hourly and look at the same exact situation, let me remove these hourly levels for right now. Okay, and now let's come over here and just see where we currently stand. So low to high, no discount retracement. That's okay. No discount retracement, no discount retracement. There it is. Okay. Yep. Relative equal highs, folks. I'm telling you, magnet, double the pool of liquidity. Algorithm wants to go get it. Okay. Here's your bullish imbalance right here in discount. Well, you to the tick. Bang. Mando model complete. One down. Okay. So now from this point, this is what we're currently sitting at. Okay. So the most ideal situation, I actually like this in terms of risk reward because this name has its back up against the wall. So any retracement to 155, I'm actually going to set my own alert for this too. And then, at what point do I say this trade goes bad? Let's just see if it makes sense in terms of, okay, the low of the imbalance right here at 151. So I'd be risking like $4 to make, I think 66 was the number that we were looking for on the weekly or monthly time frame, if I'm not mistaken. Let's see. We took out that high. Did we take this one too? Oh, we did. We took out the high. Okay. What's our next draw on liquidity here? 167. 167 gets us back inside that monthly volume imbalance. Yep. Okay. So yeah, well structured. If that setup itself makes sense to you in terms of your risk to reward, then it's a setup. Are we going to be right about all of these? No, absolutely not. We're not going to be right about all of these, but we gotta try and play the probabilities and make the most informed decisions that we can. All right, so that's Snowflake. Mara is the black mamba. You got that right. Wingstop, every girl. Yeah. I don't know. There's no Wingstops by me. I've never seen one. I think Pizza Hut has Wingstop wings, if I'm not mistaken. Elf. Yes, Pura. We did spy. That was one of the first names. Would you do Elf actually? Pretty weighted in IWM. Been trying to look at IWM. Yeah, Roblox too. Yeah. Well, let's do Elf and then Roblox. And then unless there's any more that come in, I'm gonna call it quits. All right. Let's see. Elf. Okay. So as you can see, monster move. Okay. Low to your high, no discount retracement. Wah, wah, wah. Okay, you have a big range. Okay, not quite in discount of the range, but that's okay. Here's a bullish imbalance right there. Here's a bullish imbalance right there. And here's a bullish imbalance right there. And wait, hold on, one more. Bullish imbalance right there. Yeah, continuation move, very possible. Okay. This is the massive monthly range. If we look at the weekly, I bet you it'll be refined a little bit. So let's come on over here to the weekly. Ha. Yep. Why would it bounce there? What the heck? I'm going to just make you guys see this. Hold on. Okay. Do you see it? See that little gap? Bullish volume imbalance. Not bad. Okay. So we're working on a bearish fair value gap here on the weekly time frame. But we would not anticipate that causing much trouble if our overall draw on liquidity is higher, right? And this is a bullish structure. So this, we would view that as a speed bump, and that's about it. But that is elf. Yeah. So if it's heavily weighted as well, and you get that run back to those highs, that, and my model would complete there. Sheesh. Okay, and then the last one we'll do for now, unless somebody else put something in the chat that I didn't see yet. Here is Roblox, another one of my favorite setups. So there it is. Nothing has structurally changed on this whatsoever, despite not last week, 2 weeks ago. It was terrible movement. And yeah, so low to high, relative equal highs, discount retracement, bullish imbalance, anticipating a run for highs. You also have a low resistance liquidity run because there is no higher time frame levels inside up to that 53.88. And then ultimately from that point, you see 50% of our overarching bearish range up there at $81 hairs. So Roblox, not bad whatsoever. And then the way you can look at this again, even if it were to go against us, right? What is the, stop out in this situation? It's the low of the candle that created that imbalance, 31. So the way that I'm looking at it is, because I do have a position in this, is a $5 risk for a potential, at the very least, first scale out 11 points. Then from there, 18 points, and then ultimately my final destination. Because at this point, who knows? If this is a real company, we would anticipate it to shift and move higher. But I don't know. I'm not sold on that yet. I don't, not really interested in that either. So I would look for that discount retracement, and that'd be it. But this is a monthly setup that could take a long, long time. Now, very similarly here, let's go to the weekly. There she blows. Low to high, discount retracement, bullish imbalance, check, all good. And we filled that last inefficiency here. Do we have lower imbalances? We do. I don't favor those per se, though. Could there be a situation where we see 33? Possibly, but that's about it. So at this point, notice how all these imbalances are also filled, right? Just worth noting as well. So yeah, that's Roblox. Like the name. All right, let's do SMCI. And if nobody else puts any more, I'm calling it quits. So SMCI. Very similarly, these are monthly imbalances, of course. Okay, and let's see the run that took out those highs. Discount imbalance. Ayo. Look at those bodies. Run for highs. Beauty. Okay, so our next price run would be from that low to this high. Not quite. Oh, it did get. Oh my gosh. This hit discount? Oh boy. Yeah, I don't know. I think these semis look pretty good, man. That's pretty good. So my model completes up here at 12.29. This is a big range though, and we didn't really get down into these imbalances in discount, but we got to discount, we got into the imbalance. So my model's finishing up there at 12.29. I think NVIDIA looks good. I think AMD looks good as well. So we'll have to find out and see. But sheesh, I didn't know it got into discount of the monthly range. That's crazy. So the weekly, it did the same. Yep. Shoot. We got one imbalance to work against too. That's it. There it is. Yikes. Okay, so you might say, oh, look at that green level. It got roasted, man. What the hell? This isn't premium. This is why I don't like to buy those. Right? I don't like to buy the premium imbalances. I like buying them in discount because they move much better, and my risk reward is much better off of them too. So that's SMCI. Wow, I did not know SMCI got into discount. Oh my gosh. That's crazy. That is crazy. All right, let's see. Oh, cool. We got I'll do Palantir and Net for sure. Let's do PFE first because it came in first. All right, FISA. Monthly. Ugh. Yikes. All right. So there's whoops, here we go. Let's zoom out. See? Okay, overarching. Okay, let's just freehand this. Low. Ayo. Come on, give it to me. High. Discount retracement. Bullish imbalance. I see it from here. And we'll zoom in just to so you guys can see it too, because unlike everybody else on Twitter, I can actually show you why my stuff works and theirs doesn't. Okay, there's your bullish imbalance. There's your run for highs. Beautiful. Mando model is complete. All right. So now from this point, let's go to our, why can't I use this price run? I mean, could you? Yes, you could, but there's your discount retracement, bullish imbalance, run for highs. There's your discount retracement, bullish imbalance, run for highs. Thank you again. And then here it is again. Wayo, come on, give me it. There you go. Okay. And then, whoa. Okay. Turtle soup that low. Here's your monthly imbalance right here. Yep. So still in discount of your overarching monthly bullish range. That's where FIs are sitting at the very moment. We just got into that monthly fair value gap here in discount. There's still a few inefficiencies down below, a couple more imbalances, but interesting enough that we're in that monthly fair value gap right there. Got a bunch of monthly levels ahead too, but that would be Pfizer on the monthly time frame. Let's break it down into smaller. Okay, very similarly, we took the higher time frame liquidity. Ultimately, no juice, right? Didn't move higher from that point. And very similarly, you're working on that same range that we had previously. And you're waiting for one of these to catch. So the monthly setup is going to be the same here as the daily. So, yep, Pfizer, monthly fair value gap. At some point or another, the expectation would be for some movement from this point. We could look at Moderna too. Looks a little better, believe it or not. So there's Moderna. So Moderna has relative equal highs, low resistance liquidity run up to 118. And then you got the bearish breaker coming up soon. So high, low, higher high, break down below, retracement back into the breaker. And ultimately, could be a potential short opportunity coming up over the next couple. So that would be Moderna. Now, what were the other ones that we talked about here? Palantir, surely. We can do Palantir. Let's look at the monthly on Palantir. Okay, look at that. Beautiful. All right. So technically on Palantir, you have a bearish range, and this would be the showtime imbalance, right? Is this company real or is it not? Right? We're going to find out. I think it's real. I think it's a good one. So ready? Here's your price run. Low to high, discount retracement, run for highs. Beautiful. Okay. Only thing that sketches me out about this is those equal lows right there at 1368. I really hate those. I've been hating on them for a while now. Here's that low to high, discount retracement, bullish order block, run for highs. Now here's your last one currently in this most recent price run. Low to high, discount retracement into a bullish imbalance, anticipating run for highs at 2750. I hate those lows. That's why I hate trading this one. I have shares, but I hate those lows so much. They had to be perfectly equal like that and not get into this imbalance. Just had to, right? Would not be shocked if at some point we get down into there and ultimately get into that imbalance, and that would be really where I would love to add some more now. But yeah, nah, this setup is fine. Couldn't this go higher? Absolutely. We could justify it to move higher. I just hate having those relative equal lows down there. And then your weekly is going to look really similar to that. There it is. See, I have it written down. Why did it have to leave these lows? Yep. Just a pain in the ass, man. Totally. So that would be Palantir. And then we can look at Net, because Net actually is a solid setup. And I know Surface likes that one too. All right. So here is. Oh, you got to be kidding me. My mouse died. That sucks. All right. Hold on one sec. Yep. So if you see net here on the monthly, you'll notice that we're holding inside that monthly fair value gap. Not quite in discount of that monthly range, but that's okay. So hold on one sec. I'm just plugging in my other mouse here. I actually said that to myself yesterday. I said there's no way that this mouse is not going to be dying soon because I hadn't charged it in a long time. All right. Yeah, I got my backup going. See how slow it moves, the cursor. All right. So now let me come on over and just, what's it called? Charge this up. All right. Here's the charge. Good. All right. So here's net. Not a bad setup at all. Here's your monthly bullish for value gap there. We got into it, ran higher. Very similarly, we're holding on. You'll see where my alert was. Haha. Yep. So that's what we're currently working with on the monthly. Now the weekly. Ain't that something? Low, high, discount retracement, bullish imbalance. Run for highs. That would be sweet. And you got relative equal highs up there at 132 also. So that would be net. And I think that might be it. Yeah, that's all. So anybody who's stuck around the whole time, thanks for joining. That is my prep for the week. Seeker, very nicely, he bought all those free month memberships for people. So if you're interested, you can go and sign up. It's in my tweet to enter for the free month. And yeah, so that's all I got. So if anybody has any questions, anything like that, feel free to reach out. We'll get after it. And that will do it. So I'll catch everybody next time.